Hello and welcome to Midas Markets Daily News. Let's kick off your trading day with the latest financial news and market headlines.
Hi traders, this is Jason with the market update. The US dollar index held above the 100 level last week, edging toward a 1% gain as markets scaled back expectations for a Fed rate cut in December. September's jobs report beat forecasts, though the rise in unemployment and downward revisions added uncertainty to the outlook. A potential US government shutdown is also delaying key data releases, including jobs and inflation, which could inject short-term pressure into the dollar. WTI crude slid to a one-month low near $57 a barrel last week, pressured by a mix of geopolitical developments and shifting supply dynamics. Ukraine signaled willingness for peace talks, while US-Russia discussions are expected to continue in the coming days. On top of that, signals of behind-the-scenes negotiation between Washington and Moscow add a bearish tone. Traders should watch upcoming EIA inventory numbers, OPEC Plus policy updates, and global demand trends, as any rebound may face downside risks. Gold briefly dipped below the key $4,000 mark last week before stabilizing above it, heading for a modest weekly pullback. Stronger than expected US job gains reduced the odds of a December Fed rate cut, weighing on bullion. Rising risk appetite also diverted flows from safe havens, especially after Nvidia's upbeat earnings boosted global equities. Although gold has gained about 55% this year and recently hit a record of $4,381, the market is now showing signs of consolidation. The yen weakened to around 157.89 last week as investors braced for Prime Minister Sanae Takaichi's stimulus package, expected to exceed 20 trillion yen. The scale of the plan raised fresh concerns about Japan's fiscal health and fueled yen selling. Rising bond yields, fiscal sustainability worries, and weak economic growth continued to delay expectations for a Bank of Japan rate hike, while firm US data keeps the dollar supported. Euro fell to around 1.149 last week, its lowest level in nearly 3 weeks, as the dollar strengthened and traders lowered expectations of a Fed rate cut in December. The shift in sentiment came after the cancellation of the October jobs report and Fed minutes showing policymakers divided on the need for further easing. By contrast, the European Central Bank is widely expected to keep rates unchanged through 2026, with inflation nearing target and unemployment at record lows.
We hope you enjoyed today's market outlook. If you have any questions, feel free to leave a comment below. Remember to join us tomorrow morning for the freshest news.